And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures family and welcome to the market prep for this morning, Tuesday, April the 4th. My name is John Hoagland. Thank you for trusting me with your time. Our focus here is always seeking accurate context of the markets, always thinking about risk management first and remaining patient in our trading. Happy Tuesday, everybody. Hope your trades are heading in your direction already if you're already in the markets. Don't forget, it is a shortened week. Good Friday is this Friday. Happy Good Friday to all of you who celebrate, and Easter on Sunday as well. But it's a shortened trading day. It is also the unemployment number. So a lot of focus on that unemployment number towards the end of the week this week. As far as economic numbers this morning are concerned, we've got 9 o'clock Central. Factory orders and job opens and labor turnovers. 5:45 Central this afternoon. The only talking Fed that I see on the schedule right now is Loretta Meester. And again, that's well after the close and into tomorrow's session. As far as the markets this morning, we've got stock indices futures ready to open a little bit higher. A lot of investors, of course, are focusing on some soft global PMI and PPI numbers from Europe last night or this morning. Also, the potential of lower job openings per JOLTS. Anticipation of unemployment rate on Friday, a shortened week, Good Friday, and hopes for a slowing or even a cessation of rate hikes. It's got the equities looking pretty chipper lately, aren't they? Crude prices are continuing higher as traders kind of ponder where that demand may meet supply. It's getting pretty pricey there. I'm not liking that. It's probably not going to look too good on the pumps either. So, of course, we'll be keeping an eye on all of that. As far as today, we do have Make Hogue Money right after the prep this morning. I apologize yesterday. I had some things going on here at the house that made it pretty much impossible for me to be able to be with you for group coaching and Make Hogue Money. The group coaching questions I have, we will be addressing on Wednesday. And of course, Make Hogue Money will go on. Everything should go on as normal from this point moving forward. And again, I apologize for the late cancellation of Make Hogue Money and group coaching yesterday. But everything is on for today. So we got the prep, we've got Make Hogue Money, we've got Coach's Playbook, we've got the prep or the reflection at the end of the day, and everything should go off as normal. Looking at myself with these shelves behind me, I think I could probably use a tan. I might need a tan here, so we'll work on that. This morning, the VIX is up a little bit at 1882, lower than at this time yesterday was 1972. The dollar index down again, continuing to leak lower at 102.2, 102.37 yesterday at this time, and the yield on the 10-year higher, but again lower than it was at this point yesterday. It's 3.46%. And it was yesterday at 3.51% at this time. Make sure you hit the lucky like button, share, question, comment, feedback, heckling, and love are always welcome. And subscribe to our YouTube channel, please. You get notifications when we do have live events, and there's going to be more of them coming up. Don't want to tip the hat too much, but we're looking forward to being and having the opportunity to spend more time with all of you. Scott D, congratulations on your step 1 success. Hopefully you're going to make it to group coaching tomorrow. We can discuss a little more of that. And Jenner, if you're here, come to group coaching because it's going to be a lightning round with the emails and the questions you sent in. And I can't stress enough how important it is for all of you for group coaching to email in the questions or ask the questions on the fly, because there is no bad question. You cannot be afraid to ask questions. The only bad question is the unasked one. And of course, nobody knows everything. I don't claim to know everything. If I don't know, we're going to flat out tell you, and these are opportunities for us to learn something together. But the question you ask is something that maybe another trader has not even thought of to ask yet. So it just helps speed the learning curve when you bring your questions and you ask those questions. So I look forward to seeing all of you there. And again, bring your questions. All right. Shaw is the first one in the room this morning, winning the prize. Good job, Shaw, this morning. Jay, Tim, Dan, Trader, Charles, Tom, my brother, love you, buddy. It's good to see you. Can't wait to see you face to face one of these days, hopefully very soon. Jimmy Decker, Rooster, my brother Rick, always good to see you as well. Hopefully see you face to face again very soon. I know you guys had the chance to meet last week without me, and I love to be a fly on the wall and hear what you guys were talking about. Steven, good morning. Bill, John, Orion, good morning. Brian, John, RCU, good morning. George, Lacey, the center of the universe. She's around here somewhere. I can hear her little toenails going tippity tap. Maybe she's coming up to say hello. Good morning, Terry King. Anissa, good morning. Scott Saw, and he conquered. Rusty Golfer, Will, Trading Research, Marcelo, Alejandro, good morning. Walks and Runs, good morning. Walks and Runs, I don't know if I've seen that name before. Welcome to the Market Prep if this is your first time here, or at least your first time saying good morning. Thank you for popping in and saying good morning. John, Sarah Hall, prayers and love to you as well. Bear Goes Long, good morning. Lacey, folks are saying good morning. One of these days you're going to have to come up and say hello. Good morning, Joe. I hope you're doing well and feeling good. Shy T, good morning. JD, Don, or Jason, Da Bull, who passed step 1 last week. Happy days. Good job, Da Bull. Love to hear of those successes. Looking forward to your continued success. Dr. VJ, Data F Trading, good morning. Band, good morning. Andy Bleed, Vince, good morning. Sijut, good morning. Columbus, Stephen, JT, and Bluebell, kissed of Bluebell from Old Hogue here. And Dan Trader, first time seeing the new background. I like you've got a spot for yours and your dad's trading badges. Yeah, I've got another trading badge that I've got from my brother. I still got to put that up there. But yeah, we got some new background here, and it looks a little tilted, but that's, I think, a function of the camera. Maybe I'll just do this. Oh, no. There we go. Now we're a little more even. All right, so good morning, Grounds Hero. Good morning, Zerain. So yeah, it's good to have a place that I can call like an office now. I feel like I'm not disrupting the whole house. I was working out of the dining room for the past couple of years, and it's good to be able to have this space. So I think it's going to make me a better trader. I think it's going to make me a better coach, a better everything all around. So I'm glad to be here in this space, and as always here with you. All right, that's enough about all of that. We're going to jump into the charts pretty quickly here. We've got the equities, at least the S&P's up against an important inflection level. Crude continuing to hold above some balance. It's going to be an interesting trading day, as if they aren't always. All right, here we go. Here's the daily in the S&Ps. All right, well, we've got quite the little rally here going here, don't we, folks? The futures volume was slow a little bit yesterday. It held up pretty well in New York. I think it was 4.1 billion traded yesterday in New York. we've got our weekly kickoff level in play. Now, if you remember last week, the weekly kickoff was 41.10. If you look at it on the 30-minute chart, it ran right through it, came back almost to it, and then found support. So I'm still kind of keeping that level kind of in my mind as to a level that I want this market to hold above for continuation to the upside. If we lose that level, then I think we might be looking more towards a pullback, which isn't necessarily a bad thing. We're going to come to a place where the market is going to need to even out inventories in order to continue a move to the upside. But again, we've got that weekly kickoff 41.70 in play, 41.70, 175, 7 ticks above it is our overnight high. So there's going to be some fish up at that area with good likelihood, with possibility. All right. The auction grade, because we lost open interest yesterday, I'm keeping it as at a B minus. B minus. I don't remember if I graded it yesterday. No, I don't think that I did. Looking at my. So I think it went from a B after Friday to a B minus yesterday, losing 4,200 in open interest. That is a warning shot that the upside move might be losing momentum. Take a look at the 30-minute chart here. Good morning, Haggle Matters, Robert. So here is yesterday. Here's the 30-minute chart. What was I going to say about the... Oh, yeah, the move through that weekly kickoff level. Here, I'm going to put a line right here, 41.10. So prior previous point of control. So there's that 41.10. I'm going to leave that on this chart for a little while, but you can see that the market ran right through it, came back to it right here. That low was 41.1150. So within 6 ticks of it, and then we have left it and then we've never returned to it. So it's why I believe it's kind of an important level. On to what we're doing today. We've got overnight longs with a gap up against an inflection level. These overnight longs are going to be looking for the continuation of buyers in longer time frame to continue to perpetuate their move to the upside. That's why I think that the weekly kickoff level here, 41.70, and our overnight high, that whole little area here, and remember all these levels are zones. They're not necessarily finite levels, finite areas to execute. They're areas. But again, I'm going to be looking, probably dropping a line somewhere up here around that 41.70 level, at least early in the session here. If we cannot hold, if we bring price back into range from yesterday, this would be a relatively large and worthwhile value area special situation play. We're opening with a good probability outside of the range and value from yesterday. The value area special situation play states, opening out of range and value, a reacceptance of previous day's value. In other words, value high is approximately 41.5675. Reacceptance of price below that level increases the probability of price reaching to the other extreme of that day's value, which puts us down to 41.3750 approximately at some point in that session. So my goal is really to see if I can find an entry up around weekly kickoff high in either direction. If we accept above, we go with it. If we reject above, we go short. If we're short, it may just be an inventory adjustment. So we want to be reasonable with our profit target and then monitor for reacceptance inside value from yesterday. I can't stress enough how much we need to continue to reject yesterday's area of value. Now, there are those that say that this value area special situation play is no longer valid. However, it is something I focus on. It is something I have used successfully to look for opportunities for trades ever since I learned about it 30 years ago. It's all in your usage. What is acceptance? Scott, if this is the Scott I'm thinking of, congratulations on completing step 1. And if you can, come to group coaching tomorrow. We'll talk about a few things. Okay. Oh, I forgot one thing here. Make Hogue Money is today. Here is the link to get into the Zoom meeting if you choose to. Or you can always watch it on YouTube. All right. Where was I? So again, no acceptance of price from yesterday, continued to the upside against weekly kickoff level opportunities. Let's look at the 30-minute chart, or the daily chart. Market profile, I should say. What am I talking about here? Here is the without the overnight session. Normal variation trading day, somewhat extreme to the downside, but it did close very well and left more excess on the low than on the top, than on the high. Doesn't surprise me. We're getting a test of weekly kickoff high here. With the overnight. Double distribution trend day in the overnight. Rejecting value and price from yesterday in the overnight. Overnight low looks to be relatively important. It's pretty much the close to the M period low or afternoon pullback low here. Not really looking at anything really on this overnight profile here, except for the high and the low and this single TPO is here. That's half back in the overnight, half back. All right. So again, back to the 30 overnight longs, already reconciling. Can't close the gap. We look for longs. Weekly kickoff high is going to be a stumbling block. It already has been in the overnight. Opportunity here. Opportunity on the lack of gap fill. Upon the gap fill, if we reaccept inside value, the move is to the downside. Acceptance, again, is subjective. We used to say it took 2 30-minute bars to close back inside value to mark acceptance. It can be a tricky play, so watch out for yourself. Here's crude oil. So volume was pretty high yesterday, as we might expect. I mean, there was new information. Where does price dampen demand? That's what the question is right now in every trader's mind. How far can this go before it's deemed as too expensive? Today we have an inside extended trading hour range so far between yesterday and today. Here's the 30-minute chart. So here's the gap. Really range bound, just digestive yesterday. We're in a new area. We don't know what to do. What are we going to do? We're just going to hang here and see what happens. Well, now we've got a little bit of information. We've got overnight inventory to the long side. It looks like we've left the opening range at the low of the session, and we have very little effort to close the gap. So it looks to me like at this point, if we're looking for opportunities, we want to try and buy weakness. We want to try and buy pullbacks. Again, we opened out of range and value. If we come back inside of range, you know, a gap close can be support, but any sign of acceptance back inside range, get out of your longs and be patient. Look for a better opportunity as the day goes on. Here's the TPO chart, and you get the TPO charts, Jason. If you open up a chart, not a legacy chart, you can find it right here in your list of chart types. There's your TPO chart. Now you're going to have to probably adjust some time frames on it And I can help you with that during Make Hogue, maybe during Make Hogue Money if it's kind of slow, or tomorrow at group coaching. All right, Jason? All right. So here's the day so far. We've opened with a gap. I believe our opening range here is the low of the range. Here's the 1 minute chart. Yes, the opening range is the low of the session, and the market is trying to continue to push higher. So here's the profile from yesterday. We have a normal variation neutral day. Excess on the high, low excess low, but we're opening with a gap above the high. We've left the opening range at the low of the session. The market is telling us that it's accepting higher pricing. Higher pricing. We don't want to look for shorts here. Typically, one of my rules is when the opening range is the low of the session, I only look for longs until that proves to be wrong. So keep your eye out for opportunities to the upside unless we take out the low of the opening range. Here's the NASDAQ. So when we look at this, this is the area that the S&Ps are currently in. We have not taken out this area. The NASDAQ has been presenting as much stronger. Well, of course, there's no banks. Yesterday was a bit of a change. Volume was very low and we lost open interest in the NASDAQ, approximately 5,700. Again, another warning shot that the upside momentum, the upside auction, might be telling us it's time to digest for a little while or maybe look for a pullback. But we have to trade what we see in the day time frame. Just keep in mind that the auction is perhaps giving us a signal that, all right, we're going to slow down this upside auction for a little while. Maybe a digestion would be in order. Auction grade in the NASDAQ is a B, only again because we lost open interest yesterday. The market has been much stronger than the S&Ps technically. Inventory adjustment, inside day. Now we're kind of looking at now an outside move to the upside here before the open. It looks like we're going to be opening with a gap. We've got a while before we're going to be getting to our weekly kickoff high here in the NASDAQ, which is 13,740 all the way up here. Got a couple of naked points of control from way a long time ago that remain out there for us to focus on. Again, if we open with a gap, can't close the gap, we're looking long. If we open with a gap, come back into value, the value area special situation play comes into play. There is a probability that upon reacceptance of value from yesterday, the opposite extreme of value is likely to be touched at some point during the session. All of this is probabilities. There's no guarantees about anything in trading. And as we always say here, ACH, anything can happen. Here's the TPO chart. We had a late spike, actually, in the NASDAQ yesterday. We did not in the S&Ps. So the base of this late spike, 13,269, opening above the late spike, indicates potential acceptance of higher pricing. We're looking for longs. Now, one of the things that I want to show you, which is a caveat both for the S&Ps and the NASDAQ. When I learned about the value area special situation play, the TPO value was what we were talking about. Okay, so we open above range and above value. In the NASDAQ, that's a good sign because we had a late spike. If we were to reaccept inside volume value, it would be reacceptance at this level up here. If we were to be reaccepting inside TPO value, we've got to come all the way down there to be accepting of lower pricing. So there's always some sort of cognitive dissonance involved in everything we do. There's probably a reason to do things and an equal and opposite reason not to do things. The nuances have to be leaned towards one side. And this is one of the things that's going to confuse that. Is it TPO value high we want acceptance of, or volume value high? Always something, isn't it? Take a look at gold now. So we have balance. Balance, balance, balance. Lower highs, higher lows. This market is coiling. This move lower in the overnight yesterday. I'm not really focusing on that. I'm looking at more of the 1, 2, 3, 4 points of contact, the 1, 2, 3, 4 points of contact on the top here. This market is coiling. It is building energy. We added 4,800 in open interest yesterday. Did that open interest come in buying it when it failed to accept down below this? Quite possible. This triangular pennant formation, balance and breakout rules apply. We're fading the extreme at the high. We're fading the extreme at the low. Upon acceptance outside, we're going with it. And we're getting pretty close to the apex here. So either the market is going to find a move and accelerate outside of this, or it could just come outside or past this apex through attrition just by staying range bound. I'm hoping that the former, the idea that it's going to provide a bigger opportunity upon a breakout of this, is what's going to happen, but we don't get to choose. Here's the 30. What did we do? Overnight inventory? No. Are we out of range, out of balance? No. Are we inside range and value from yesterday? Yes. Is there a reason to be too excited about getting into anything early in this session today? No. We're in range, we're in value. Very little change in the perception of the value of an ounce of gold this morning. Stay patient. Look for opportunities as the day goes on. Let the market establish some ranges and focus on those ranges. Take a look at the TPO chart. Double distribution, possible repair, and a very weak high. Excess on the low here. That's good. That's good. It is, again, a very weak high. And, you know, the market, did it kind of repair overnight? Yes. 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 It did. Did it repair in the regular trading hours? No. Are we finding support here in these single TPOs? Yes. Do we have a weak high? Yes. If I had to pick the nuances, I would say the nuances in gold this morning are friendlier towards the upside. Again, anything can happen. Here's the euro. Still kind of fighting that weekly, that last week's high. The week before last week's high, still wrestling with that area. We lost 4,100 estimated open interest yesterday. That's not good for continuation to the long side, but overall, the upside structure in this market does remain. Open interest lower, volume lower, indecision. This doesn't look like a very indecisive bar, although the lack of open interest increasing does tell us that may be another warning shot that the upside move might be tiring, at least for now. Here's the 30-minute chart. Overnight inventory. Where'd we start? Here. Got too long, too short, flat, back in range, back in value. Stay patient, my friends. Stay patient. Here's the TPO chart. A little excess, a little double distribution, normal kind of trading value. Nothing really here. Nothing really here. Excess here in value. In value. What are we doing here? We're waiting. We're staying patient. We need new information. We need a change in order to take advantage and profit from that change. Here's the 10-year. Added 15,000 in open interest yesterday. We're still rangy, range-bound, volatile, but range-bound. Volume was weak yesterday. And open interest kind of inert. 15,000 isn't big for the 10-year. Unfinished gap above. Take a look at the 30. So we have this gap that remains unfinished. We tried yesterday. That's rejected. Overnight inventory is short. Possible repair. We have a high volume node here. We have a semi-high volume node here, but it's really this point of control that I would be thinking more would be involved in anything we're looking for as far as repair is concerned. But I'm not going to jump in front of this. I'm not going to try and pick a bottom in this without some sort of structure. We just put in a week low, regular trading hour and overnight trading session. This is a tough market, man. Tough market. Here's yesterday, double distribution trend day. Showing rejection, showing possible repair. I mean, we could easily trade up to point of control from yesterday and to an assumed point of control down here. Kind of what we were just talking about, because the market did open in an area of repair to the natural gas here. Here's the 10, the daily. A little bit of excess on this profile, on this 1 minute chart down here. It's a little indecisive. Downside structure is certainly intact. Take a look at the 30-minute chart here. Opening right back into value. Gonna suggest trying to stay patient here. And I always thank my lucky stars that I don't trade this product. Just wondering, we added 11,000 contracts yesterday in largely a range-bound day. Did we bring in buyers? Did we find buyers down here yet? I think we'll know if we start taking out last week's low. And that is going to do it. I know we've got Make Hogue Money coming up here. So let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today, Jason. I think I've probably turned a few people on to favor the 30-minute chart over the 1 minute chart. You trade a lot less. Sometimes you can make a lot more. It's good to see you, Jason. Thanks for the comment. Scotch masking duck. Good to see you, Jason. And we'll see you all for Make Hogue Money here in just a few minutes. Get out there and profit today. Don't forget about Coach's Playbook today. We're going to be talking about gaps on Coach's Playbook today. How do we deal with gaps? So looking forward to seeing you there. And I'll see you in just a couple minutes for Make Hogue Money. Let me get set up and we'll be up and running shortly. If I don't see you, have a great trading day. Get out there and profit. Have a good day.